Hey, good afternoon, everyone. It is 2 o'clock. Let's just jump right into how the market's traded today. I'll try to keep this relatively short and simple. New crop soybeans. This is November 2024. Where are we and what are we doing? Let's go back and zoom this out real quick so we can get a little bit broader perspective. I know sometimes you want to go to the weekly chart to see this, but I think you can see the activity here and the importance of this 1320 level, okay? You can kind of just draw a line right across that level and you can see all of the support and resistance dating all the way back to all the way through 2022. Here's 2023, and then we're coming into 2024. So 1320 is a big level. One way to think about this is anything under that, I want to be hedged, and anything up above that, I want reownership on, because if we're going to go to 14, 18, 20, whatever number you want to pick, you got to go through here first. So you can't make it any simpler than that. And so the question is will we come through there? And the answer is I have no freaking idea, because this setup here looks really good. I mean, here we have a sideways consolidation pattern that's lasted from mid-July all the way through today. This looks really, really good because consolidation normally favors continuation. And then this is following a 5-wave move. So you've got 5 waves up, nice and strong. You've got no divergence on the oscillators, and you've got consolidation off of that move. So odds would favor a higher resolution to this price. And another thing that's supporting that, as I zoom back in, are these red numbers here, which generate, you have to get through, to get to a 13, you have to get through all these numbers. As long as we're trading the top end here, that means that higher prices are more likely than not. So those of you that have looked at our algorithm, you know that red 13s are sell signals. But when you're at a 7, the odds highly favor a new 13 that's coming. Now, what we don't like is the fact that we're also threatening to break out the bottom side of this. And when we get to corn, you'll see why we're even more concerned about that. So are the fundamentals in place to rally the soybean market? Yeah. Super bullish in South America. We're still pretty tight, and we haven't grown the bushels needed to overwhelm this market with supply yet. So can we go higher? Absolutely we can. Do we have to? No, that's absolutely not a guarantee, because the market has known about our supply situation and the market has known about the Brazilian weather for a long time. So either one of two things is happening with that Brazilian weather situation. It's either priced in already as a known factor and this is it, this is the high, or the market is simply waiting, saying that the drought is so severe that if we do go higher, we're rationing, and that's explosive and volatile. So it makes sense that the market doesn't want to get ahead of that too far. It wants to make sure it's careful before it destroys any demand. And so we're sitting here with this big sideways range, waiting on confirmation. Now, will we break out of the bottom of this? I can't tell you. I don't know. If we do break this 1258 and a quarter level, will we come all the way down to a 1234? Probably. Will we come all the way down to this area of chart support back here at 1198? I don't know. All I know is that 1198 and 1258 are a long way away, and so we don't want to risk that much. I would rather risk back to 1288 than risk the downside. So we're going to sell a close below 1258 and a quarter. So let's talk about the holidays here. If we get there tomorrow, I think we need to sell it. And then I think we just buy calls or exit that position if we take this stuff back out up in here. But if you're nervous about the holidays, then just buy a put. You don't have to be fancy with it. Just buy a put and let it get you through the holidays, and then you can reevaluate what you want to do at the end of the year or at the beginning of the new year. But this low is significant and shouldn't give way, especially not on a closing basis and not for more than a day or two. So if we do sell it, I think it's a high likelihood of a whipsaw, but on the other hand, it opens up more downside and risk that we don't really want to let go. So this is $12. Here's $11.83. Down here is $11.30. Can we do it? Yeah, we absolutely can. What about old crop? What's it doing? Well, it looks a little bit stronger. It didn't violate any of its lows, and it hasn't quite gotten as deep in its retracement as um, as as the new crop has. So maybe there's still some hope in here, but clearly we don't want to see any more weakness, and we don't want to see these lows right in here give way. So beans are on the edge here of flipping over and needing to be sold. All right, now let's jump to corn. Didn't like corn's action today at all. We were not able to hold this November 29th low at 475. We actually closed below that. Um, we closed today at 470 and a quarter. So, and I'm sorry, the low was 470 and a half. So we closed just at the same level as this low back here after making a new low. I don't like that setup at all, and no different than the soybean market. These numbers on the bottom side indicate further weakness ahead. So and then into a bottom. Now what I do see is divergence action on all of our oscillators and across our MACDs. So this trend is getting pretty mature. I think that this move is the last move in the trend, and then we have to establish a bottom and then work higher. So we're going to hold hedges in place for now, and we're going to just be patient and then open the upside back up when we get a signal to do so. New crop corn, here's 2024 new crop. It looks bad as well, right? So as this stuff gives way and $5 gives way, we're going to let that hold for a day or two, and we're going to exit the long calls we have. You know, we are short futures here. We're just going to hold that position and let it do its thing, especially through the holidays. I'll probably be pretty slow to come out of those calls through the holiday because I think the risk of a whipsaw at the new year is stronger than not. When we went through our back test, a lot of times you have a year-end down move followed by a move right back up. There was a lot of whipsaw action in that back test. So that's why we're going to be pretty careful on how we manage it. But you can't argue that this is a good look for the corn chart. This looks like it's rolled over and wants to move lower, probably down into the 480, 485 range, possibly as low as the 450 range if traders want to really get after corn. So how did wheat respond to that? Not well at all. Wheat just went ahead and took away everything that it put on yesterday. And you can see the 11 here. 2 more days of lower closes, and you're going to get another 13. A dual 13 from the same level with an intermittent 9 is a significant signal, and something that says open the reownership back up because the divergences are getting more extreme, and the probability of, if we do push this thing lower, of that being a new long-term low is even greater than at any point prior. It's not something we want to chase to the short side. It's just something we want to be opportunistic on to the long side. So that's all 3 markets. That is what I've got for you today. There is risk in managing this stuff. Obviously, we all know that. So beware of your financial condition and manage that accordingly. And I hope you guys have a great night. We'll be back with you tomorrow as we close down. Our hours next week will be limited. I'm not sure when we'll send videos out, but we'll be watching the markets and send them out as needed, and we'll communicate as we need to do so. But you should expect at least 1 or 2 videos next week. And other than that, be patient with us as we do try to take some time off to spend with families. Have a great night. We'll talk to you guys later. Thanks. Bye.